the entire family's financial life. What differentiates us is a very holistic approach. So we don't just believe in investing, but we look at 6 pillars of financial fitness. So we look at financial goals, basis the goals and risk-taking ability, we make a portfolio. We also look, keep a family prepared that in case if there is any untoward event, what is going to happen to that wealth? How will it get transferred? So will estate planning, we make portfolios and investments with that thing in mind. We look at risk management, so term health insurance for the entire family if it's adequate, not adequate, because one bad incident and it can wipe off our savings. Even taxation, so we look at a person's financial life and a family in such a way that what are the sources they get income, what is the taxes which they are paying, and what can be done, how can the income be restructured so that tax liability comes down massively, and that can help them save more. So taxation is a very important pillar. And the last but not the least, we also look at the kind of loans or the debt the family has, and we give a plan to become EMI free as soon as possible. So the approach we have is very holistic, it's very personalized. Every family will have their own financial plan, their own customized portfolio, their own estate planning and all that. So we are a team of professionals. So we have chartered accountant, chartered financial analyst, certified financial planners, cost accountants, postgraduate management students in our team. So we are 80 plus people right now. And we have our own tech platform, which helps you understand not only how your portfolio is performing, but how is it doing versus the benchmark? Because it's more important that what am I comparing my investments and my returns with. So with this, we start today's webinar, which is going to be extremely important for the mutual fund investors. That if you've been investing in mutual funds, how do you track your portfolio? What is a benchmark? How do you understand returns? We will also understand that if in case you are an investor, how can you extract every single information about your mutual fund investing, through CAM statement. What do you need to see in that CAM statement? How do you understand with your CAM statement that how your portfolio is performing versus the benchmark? So it's going to be a very practical, very crisp kind of a session. And for this session, I have the Finnovate team joining me. So the speaker for today is Mr. Sagar Maheshwari. He's a certified financial planner. He's trained more than 5,000 professionals on financial planning and how to build a portfolio. He's managed over 400 crores of assets in mutual funds, equity, and various financial products. So welcome, Sagar. And we also have Vandana, who's also a certified financial planner, and Pranav and Sakshi from our team, who have been instrumental in bringing this webinar for us today. And there are a lot of people in the Finnovate team who would be answering all questions which you have. You are free to post the questions in Q&A and chat. This is going to be a very interactive session and a learning session. I would say you can keep a pen and a paper ready. You all can also make notes from this session. And we'll be posting a link where you can join the group where you will get updates about our webinars and all. And you can post today's notes in that group so that it will be helpful for others to just, completely document the learning what they got from this session. So with this, we kickstart the webinar. All over to you, Sagar.
Thank you so much, Nil ma'am. Hello, everyone. Hope you have had a good day. So today we have connected to learn about mutual fund returns. So what we have seen is that there are various kinds of returns. We'll see that there are various kinds of return which you can use to manage your or review your mutual fund portfolios. So what we'll do is today that we'll try to clarify when to use which kind of returns, how to use those returns, what are the shortcomings of a particular return, what are the pros and cons. So we'll do this one by one. Now, before we start looking at and get into this, what I would like to know from all of you is how do you measure your portfolio performance as of now? Are you looking at absolute returns, CAGR, XIRR? What do you see in your day-to-day, apps which you would be tracking, or how are you doing it? Can people please post? So we have raised a quiz. Let's see what returns are you tracking as of now. I hope people are answering. We'll keep the poll for another 10 seconds and then we'll see the results. Okay, so someone has mentioned dividend yield is what they're tracking. Okay. So, the biggest problem today people face is great. So we have gotten the results. 10% people have said absolute return, 21% say CAGR, 44% are using XR, which is good, 4% dividend yield, and some say they just check their profits daily. Great, great. So we have a good mix of people who are tracking various returns. Today, what we'll look at is when to use all, the main three returns, your absolute CAGR, XRR. What is the main difference between all these? What are the shortcomings? And how to calculate these as well. So now starting with the absolute returns. So this is what will be covered. We have, I think Neil ma'am has already informed what all we'll be covering. So I'll just skip this. So we'll come to absolute returns. So absolute returns are very simple. Absolute return captures the simple profit earned on an investment. So basically, if let's say 1 lakh becomes 1.5 lakhs, so you have earned basically 50% return. So most of the people, look at it as the return that they are getting. Most of the demat accounts which we have in India are also showing this return, which people feel is the return that they are getting. So what has happened is that you have been investing for quite some time. You invested over a period of time. You invested money in multiple cash flows. You did redemptions and everything. But you see that, okay, I invested 1 lakh. Today it is 1.5. The return is 50%. So how do we calculate this? It's very simple. End value minus invested value. So 1.5 lakhs minus 1 lakh, which is 50,000 divided by the 1 lakh into 100 is a 50% return. Now, the problem with this return is that this return does not consider time. So if you look at the time, so if let's say this 1 lakh becomes 1.5 lakhs over a period of 5 years, the return in a simple terms would be 50 divided by 5. Simple return is 10%. So coming from judging your portfolio, looking at your portfolio or your returns and thinking that it is 50%, but if you've done it over 5 years, it's just 10%. The whole scenario changes a lot. So it is very important to know that are you looking at the right kind of return? Are you looking at the absolute return or the CAGR return in your portfolios? And the most, majority of the demat accounts which we have seen are using this return, which at a lot of times we have seen is misleading people because they feel that, okay, I am sitting at a 50% profit. Ideally, you should be earning 12% returns from a mutual fund portfolio or let's say a stock portfolio. I'm beating the, markets, everybody by a huge margin. But actually, when you look at it, maybe you are underperforming. So it becomes really important that you know that what returns you are looking at. So as we mentioned, the biggest constraint for an absolute return is that it doesn't consider time. What is the time horizon? If the same return you have earned over a period of 10 years, your return is 5%. If the same return you have earned over a period of 2 years, it is 25%. So considering the time is very important when you're looking at your returns. So how many people knew that, that the returns that you are seeing in a demat account is absolute return? And how many people were very happy looking at a 50% return, but they have been investing since 5 years and today they got to know that, okay, it's an absolute return. How many people have seen their returns on the demat account? What are your returns? Did you know that it's an absolute return? Yes, so people are saying yes, they knew absolute returns are there. And how many people have calculated the actual returns? So how to calculate an actual return or the CAGR or XR? We'll look at it. So we'll move to the CAGR returns. So CAGR return or compounded annual growth rate is the amount of returns that you have received on an annualized basis over a period of time. So average annualized returns you have earned over a period of time is basically your CAGR. Now C stands for compounded, what we talk as the eighth wonder of the world. So compounding return is CAGR return basically, right? Now, how does CAGR how is CAGR calculated? So let's say today you are at 1.5 lakh rupees. We'll take the same example. You invested 1 lakh rupees. This investment was done 5 years back. So the return that you would be earning in absolute terms, it was 50%, but in CAGR terms, it's just 8.45%. So instead of 50%, if you're seeing a 50% return and you've been investing for 4 to 5 years in stocks, your actual compounded return is just 8.45%. How is it calculated? We have mentioned the formula. We look at going forward in an Excel also how you can calculate all these returns. So current value divided by the invested value raised to the power 1 by n minus 1 into 100 is your compounded annual growth rate formula. Now where n stands for the number of years. So CAGR, where is CAGR used? Where do you think you find the CAGR returns? Are you seeing it in your portfolio? Where do you find CAGR returns the most in today's world? Which asset classes, or where, there are very common places where you are looking at CAGR returns? Yes, people are mentioning mutual funds, which is absolutely right. Mutual funds, all the websites, most of the website, I would say, when you go and look at 1 year, 3 year, 5 year returns, those are basically CAGR returns. They show you from one point to the other. So if you, let's say, the NAV of a fund was 10 rupees 5 years back, today it is 15 rupees or 20 rupees. They'll, over a fixed period of time, they'll show you the CAGR returns. So what we do is we look at, we go on various websites, we search a fund, we look at, okay, what is the 1 year, 3 year, 5 year, 10 year return? We just look at it and then say, okay, oh, this fund has done really well. Okay, I'll invest in this. Sometimes we go and look at the funds that we have in our portfolio and we go and see, okay, acha, uska kya return tha? What is the return of that fund? We say, oh, it has given 20% return. Good. My portfolio is doing good. Or my fund is doing good. But the main challenge is that CAGR, the biggest problem with CAGR. Can anybody tell me what is the problem with CAGR? It looks like a good investment. Compounded returns also it shows. Absolute ki tarah it considers time as well. But what is the biggest challenge with CAGR? Anyone? Someone has said fixed time and one-time investment. So the biggest challenge with CAGR, time frame should be more than 1 year. Yes. So you are absolutely right. CAGR, although we can calculate CAGR for less than 1 year also, but ideally, yes, it is more relevant for investments greater than 1 year. Absolutely right. What else?
I think someone has very rightly written that cannot calculate repeated investments. So what he's trying to
Yes.
say that if you have invested one time and then after 5 years you're looking at the portfolio value, like you invested 1 lakh, for example, one time, and after 5 years it has become 1.5 lakh. So it was a one-time investment, and I'm looking after 5 years, and I've taken the 5 year time period in factor, and then I've got a CAGR. But what about if I'm doing regular investments, like I'm investing every month? So there are multiple number of times I'm investing, and I'm not only investing, I'm investing, withdrawing. Okay, so what should you do if you have multiple investments happening, and even if withdrawals happening? So CAGR, I think, yeah, you can take the limitation of CAGR.
Exactly. So the limitation of CAGR is basically it does not consider periodic investments or irregular cash flows. So as we saw that CAGR is basically looking at from one point to the other. Whatever is done in between, it does not take into consider that, right? So just give me a second. My battery is dying now.
Yeah. So, like we were discussing, that we as investors don't invest just one time and then we look at it after 3 or 5 years. So, if you have invested in some instrument, like I will say, real estate is a classic example. Uh, you bought a property 10, 15 years back. At that time, you put 1 crore in real estate. Now it has become 4 crores. So, people are very happy. Ki, I put 1 crore in property. Now it is 4 crore. So what they are happy with, they will say 3 crore बढ़ गया. That 3 crore बढ़ गया over a 15-year period. Absolute return is 3 crore. But when I calculate it in CAGR, then it will be lesser. And in this case, I can still use CAGR because one time I put money in property and now I'm looking at the value after 15 years. But in a instrument like mutual funds or something, it's not that we are just investing lump sum one time. We are doing an SIP. That means we are investing every month, and we are not only investing, sometimes we are withdrawing, switching, doing many things. So there are multiple times that we are investing money and there are multiple times we are withdrawing money. So in this case, how do you calculate return? Okay, so this is where we will
Exactly.
come to the CAGR limitation. All over to you, Sagar.
Yeah, sorry. So yes, so as mentioned that CAGR doesn't consider interval the investments that you are being doing in between the cash flows. So especially for SIP, CAGR is not very effective. So the limitation of the absolute return was it doesn't consider time. The limitation of CAGR is that it doesn't consider periodic investments. So to our rescue comes the XIR return. So XI return basically extended internal rate of return, the full form. But what does it do? It considers it helps you to calculate returns for multiple and irregular cash flows, such as mutual fund investments. So as mentioned that we lot of times we are investing for a long period of time in mutual funds, then we withdraw some amount in between, then we again reinvest, we book profits, we pay some tax. So there are a lot of cash flows which is happening in and out of money. So how to calculate that? How to take care of each and every transaction into consideration is where the XRR comes in. And XIR, to the extent it even takes exact amount of days that you have invested in a certain amount, how you are withdrawing it, each and everything is considered. So what we'll do is, because XIR it doesn't have exactly a formula, we'll go to an Excel sheet and we'll see how we can calculate the XIR return. Is the Excel visible?
Not yet.
Okay. Is it now?
Yeah, it is visible now.
Okay, great. So let's consider an example where somebody started investing in September of 2021. They invested 5,000 rupees per month in the SIPs. So total till date, they would have invested around 18 lakh 50,000. And let's say the value today is 25 lakh rupees. Now what we'll do is we'll calculate all the three returns that we have seen till now. So first of all, we look at absolute returns. So absolute return, we have seen the formula that it is current value minus the ending value, the starting value, the invested value divided by the invested value. So return comes 35%, which if you look, on a simple basis, yes, your money has grown by 35%, but it doesn't consider again the time. So we have been investing for almost 3 years. It does not consider that. Coming to the CAGR returns, so CAGR returns would be the initial value, current value divided by the starting value raised to the power 1 by 3. So we have been investing for 3 years. 2021 started. We are in September 24 minus 1 The return is 10.56%. And now we look at the XIRR. So XIRR, usually in Excel, you go to any Google sheet or Excel, you find the XIRR formula. So in this, you have to select all the cash flows. So what we have done is I've already plotted all the cash flows. We have been investing 50,000 for the, 30, almost 36, 37 months. And today the value is 25 lakh rupees. We select all the cash flows. We select the dates as well. So if you have invested on various dates, different dates, withdrawn anything, everything, anything can be covered in this. You select those, you just hit enter and you get the XIR return. So XIR return exactly calculates the time each and every investment has been invested for exact to the day, and then it gives you the return. So your actual return, the returns that you have been getting through your SIP investments is actually 20%. So it's not 35, it is not 10. Your ideal return or the return that you're getting from your portfolio is 20% returns. So XIR here helps you in judging the right returns. Now we can also see, let's say at this, at some point in time, somebody, let's say, withdrew, instead of investing 50 lakhs, they withdrew 1.5 lakh rupees. We just changed that. So
Also,
all the invest
1 second, Sagar, someone just asked if they are not investing fixed 50,000. So you can say that first year they invested 50, then 60.
exactly
You change any amount they invest different amounts,
anything.
at different time they withdraw. So we'll do it's like nothing is fixed. Everything is very variable. Still, we can find out the XIRR returns.
Exactly. So we'll change. Let's say we do 60,000. Investments we'll take as minus. So in Excel, just one thing we need to consider is the inflows can be in minus, the outflow in plus. So accordingly, if we do, then we will be able to see the exact return. So let's say we did 60,000. We have mentioned that, okay, in some period in time, let's say at 18 months, you withdrew 1.5 lakh rupees, you got some returns, something or the other, right? Here also, again, you withdrew 1.5 lakhs. Then you invested, let's say, another 4 lakhs here. So your returns, considering all this, comes to 23%. So XR is very dynamic. The other two returns would not, it will be very difficult for you to consider the returns in other two cases, but XR immediately gives you the exact returns for the cash flows. Any questions here? Anybody has any questions?
Yeah, I think there are a couple of questions in the chat. People are asking that is the XIRR return annualized? So I guess you can
Yes,
answer that question.
exactly. So yes, the returns are annualized. The returns that you are seeing here is on an annual basis. So yes, because why it is showing more than the CAGR is because each and every investment that you have done has not completed the required amount of 3 years, right? So if it has considered, let's say, any investment, so the last investment that we did on, let's say, 1st of September has just completed 18 days. The amount of, on May has completed just 4 to 5 months. So XR considers each and everything, extrapolates, and then gives you the returns that, okay, if this kind of return continues, you will be around this much of return.
Okay. I think people are requesting can we show how did we calculate XIRR once more? Okay, so we'll
Sure.
go back to the Excel. We'll take any example, like we'll take 10 lakh, someone invested one time, and then 25 lakh, and someone invested that 10 lakh over a period of 5 years. And we'll also look at the difference, what CAGR, what XIRR, and what absolute is showing. For your benefit, we'll do this once again. And people are asking, can we calculate XIRR for stocks? Yes, you can calculate
Yes.
XIRR for equity investments. And the right way to track the performance of your direct shares portfolio is also XIRR, because you are not buying, like you're not investing in equity at one point of time, then you are withdrawing after 5 years. Even in equity, you are investing very regularly. Like some share ka price fell, so you invested, it fell further, you averaged. Okay, so there are multiple dates in which you are putting money in equity. So from like you will be getting the dates when you're investing, you will get the amount which you're investing. Okay, and then you will come to know what is the portfolio value. So you can calculate XIRR for your shares portfolio, and that is the right way to track the actual returns of your portfolio. Okay, so Sagar, if we can take one more example of how to calculate absolute XIRR and CAGR, and also example of 10 lakh
Yes.
over 5 years and 25 lakh fund value.
Yes, yes, yes. I'll just do that. Just a second. My screen is hung up. Pranav, can you just stop the screen sharing once?
Someone is asking that how to track the stock portfolio XIRR returns. We will cover that in case if you know the buying price, sorry, the buying dates of your shares and what amount you invested. We don't want to know which stocks you invested, but if we know the amount. So if you invested, if X money went out of your pocket and Y is your portfolio, value right now, we can calculate the XIRR of your equity investment. If you want share wise XIRR, even that is available. We'll show you that how we do it on our platform, where we look at the XIRR of shares individually also and at the platform level also. So I guess Sagar is back
Yes.
on his Excel. So we'll do one more example of calculating XIRR, absolute and CAGR.
So
So
what
you can
we'll do
take
is
yeah, and you can show them how the formulas will also come. Because
exactly.
someone was asking कि XIRR आपको Excel में कहाँ से आया? So there are two ways
Sure.
in which you can get that XIRR formula in Excel. It could be like we will demonstrate both the ways. It is very simple. Every investor can do it themselves if they know the date of investments and amount of investment.
So what we'll do is we will also show you how to get the dates of your investments. There are reports which can give you such dates and the amounts. Also for stocks, you can get, I think the trade books are available in most of the demat accounts. You have to download your trade books. You can upload that in an Excel, get the dates, get the amounts, and then you can calculate your XR returns as well. So what we'll do is, as we mentioned that, okay, let's take an example of so amount invested.
10
Let's
lakh
say
rupees and a portfolio value 25 and period 5 years.
10 lakhs. Portfolio value is 25 lakhs and period is 5 years. So what we will do is, so now let's calculate first of all the absolute return. So absolute return, the formula I'll also mention here once more. So it is the portfolio value minus the amount invested divided by the amount invested. So if you apply this formula, simple, you will get the absolute returns. So moving ahead, 25 lakhs minus 10 lakhs divided by 10 lakhs. This into person 100. So 150% is your return. Sorry. So return is 150%. So 100, obviously, you have made a return of almost 15 lakhs, which is 150%. So your returns comes 15%. Now we'll calculate the CAGR. So it's the end value. So I'll just mention the formula first, if for everybody's reference. So portfolio value divided by the invested value raised to the power 1 by number of years minus 1 into 100. Minus 1 will just convert it into percentage. So we'll again put the formula portfolio value by the current value raised to 1 divided by 5, the number of years, minus 1 percentage. It is almost 20%. Right? Now to calculate the XIRR, we will need the cash flows. So what we will do is, let's say we will break this 10 lakhs into various cash flows, right? And we can take any dates, right? Over the last, we'll not consider it, let's say, as an SIP. We will do, okay, you invested different amounts at different points of time, and then see what would be your XIRR return. So let's say we started investing in 1st Jan 022, oh sorry, 5 years would be 2019. We invested 1 lakh. Then maybe you didn't do anything. You invested another, at the time of COVID, you were very brave. You invested at that point of time. So let's say 23rd of March 2022, 2020, you invested 3 lakhs. Then let's say 30th of November 2020, you again invested 2 lakhs. We will say, let's say 15th September 2021, you made good profits, the markets went up, you thought, okay, let me book some profits, so you withdraw 2.5 lakhs. Now again, we will say, let's say another 17th Feb 2022, you invested 4 lakhs. So we're at 7.5 lakhs. Let's invest another 2.5 lakhs. So 14th March 2023, you invested 2.5. So we are at 10 net. And today the value is 25. So now what you need to do is, so as we mentioned, there are two ways you can get the XIRR formula. Simple. First is you mention the equals to sign, type XIRR and the bracket, and your formula is there. In the Google Sheet, you'll also get the prompt, okay, what you need to do, how you need to select. So first it says cash flow amounts. So this is the cash flow. We will select all the amounts of the cash flow. Then it says cash flow dates. We'll select the cash flow dates and just we press enter and we get our return. The return in this scenario is approximately 29%.
So if you can see the difference, absolute return was 150% because someone invested 10 lakh 5 years back and today it is 25 lakh. So he'll be very happy. Mera 10 lakh 25 lakh ban gaya. Okay, the absolute return is 150%. But I want to look at annual return. So if you can see CAGR, which is like an annual return, that is showing 20%. But we have not invested the entire 10 lakh on day one. Okay, we as mutual fund investors or even as stock investors, we invest different amounts on different dates. So CAGR doesn't help us and we need to look at XIRR. So if you see, when I consider different dates and different amounts of investment, then the XIRR became 29%. And it is more than CAGR because in CAGR, what was assumed, okay, we invested the entire 10 lakh 5 years back and now it is 25. But in reality, we didn't invest the entire 10 lakh 5 years back. We have invested 1 lakh, 3 lakh, 2 lakh, like that. So the last 1 or 2 year ka money has not completed 5 years. Okay, that has just been invested and now we are looking at the return. So XIRR is higher than CAGR because XIRR is also considered investments which have not completed 5 years, which you all have very recently invested. Okay, so absolute return in this case would have been extremely misleading. Okay, what is the right way to calculate is going to be the XIRR. I guess we tried doing one more example for which everyone would be clear when to use absolute return, when to use CAGR return, and when to use XIRR return. If any questions you all can post, we will answer this further. All over to you, Sagar.
Yes. So, absolute returns usually are, you can look at only when your investments are less than 1 year and there are not too many number of transactions. Absolute return can show you still a basic idea about how your portfolio is doing, because sometimes what you will see is, which you would have observed, that if you start investing and as soon as you start investing and the market goes up even by a little, the extra return sometimes shows 100%, 150%, things like that. So I think at points people, we have seen that they get confused. Okay, how is it showing 100%? मेरा तो पैसा अभी मैंने, I have just invested 1 lakh, it is 1,10,000. Hardly a 10% return, but it is showing such a kind of return. So what XIR does is that if the similar kind of returns continue, you continue to get over the next 1 year, is then you will make the kind of returns that the XIR shows. So yes, XIR also has its limitations, that before 1 year, it might not show you the exact picture and might be very inflated in case the markets are up or down. So at that point of time, maybe absolute or a CAGR return would work. But yes, over a period of long term with multiple cash flows, the way a normal investor would invest, investing irregular amounts at different period of time, withdrawing the amounts, all these things, XR would at the end show you the correct picture. Where do you currently stand? Okay.
Sagar, can you demonstrate one more way to calculate XIRR? So Excel has two shortcuts. The
Yes.
other one is also very simple. For that, you all don't even need to save this Excel formula. We'll just show you another shortcut also. We can go from that finance calculators. Yes. जो
Yes.
ऊपर आप जाओगे इसमें हाँ go to finance calculators. Data या टूल्स में भी होगा, टूल्स में जाओ.
Yeah. No, it's
नो ये एक्चुअली आपका ये है क्या गूगल
yeah,
शीट
it's
है.
a Google sheet.
ओके ओके ओके
Yeah,
ठीक है.
I'm also not very comfortable with that, but
तो
yeah.
यू कैन ओपन अ सिंपल एक्सेल आल्सो, या
Yes, that
फंक्शन
is.
भी है ना, इधर भी है या.
Yes. So insert functions. Yes. So we have functions. Then functions, we will go to the finance functions. And here you will find, I think at the bottom, XIR. So if you do see automatically the XIR comes in, you can again simply select the cash flow amounts, comma, the values, the XIR returns are there.
So if someone doesn't remember, if you go on the bar, there is finance, in that there is a XIRR. You just click on that and it will tell you what to select and how to calculate. It's very simple.
So the main thing for XIR would be, first of all, and the major task for you would be to plot your cash flows, the exact cash flows, how you have done it, which fund, how, on which date did you invest, when did you withdraw each and everything. If you do that, then it becomes very easy, because then you just have to apply a formula and your returns will be there in front of you. Okay. So coming back to our presentation, any questions? Can you demonstrate how to calculate XIR from tradebook on entire portfolios? So I think it would be very difficult for us to show the tradebooks, because there will be so many transactions for people, especially people involved in day trading and short-term investments. But yes, in similar fashion, you have to just take out the dates, the cash flows. Just make sure that your investments, you can consider them as give them a negative sign, and whatever is the value current that you see, just mention as positive. This is one important thing that you need to remember when you're calculating the XIRR. The signs need to be there, that something goes in and then something comes out, then only it will show you the correct picture. Okay. So now, since we have understood the different kinds of returns, what we need to look at now is, how do we exactly measure our mutual fund or the portfolio performance? So before we go and we judge the portfolio performance, we need to know कि judge करना कैसे, how will we judge the performance? So we will need a benchmark. A benchmark basically to compare, where do you currently stand? A benchmark is kind of an index, something which you can compare against. So if you would have, you have been doing some things, you have done on your own, various transactions here, there, in various kinds of products. But if you would have simply invested that in, let's say, a Nifty or a Nifty 50 or Nifty 500, which is a multi-cap index, what would have been your return? So the biggest challenge what we have seen people is that first of all, you need to know the right benchmark for your portfolio. So beating the benchmark is one thing, but knowing the right benchmark. What we have seen is people investing in all the three caps, large, mid, small. Maybe they'll have a, debt fund or a hybrid fund or, different category of funds. But they are comparing their returns with, let's say, Nifty 50, which is just the, combination of the top 50 companies, basically the large cap index only, which is again not does not show you the true picture of your portfolio. So if you, let's say, you are looking at your portfolio, it's aggressively investing into mid and small caps, your 60-70% portfolio is into mid and small caps, and then you are comparing your returns with Nifty 50 and you're very happy, oh, I'm beating it by a great margin, that might not be the right scenario for you. So first of all, knowing the right benchmark. To know the right benchmark, first of all, you need to know which all categories you are investing into, where all you're investing into, what is the percentage you are investing into which categories. So we have various categories: large cap, mid cap, small cap, hybrid funds, focus funds, your debt funds, all the different categories. So each and every category has their own benchmark. Now, these benchmarks are usually mentioned, against the schemes, and you will see in the scheme document, the fund fact sheets also, you will see the, different benchmarks. What SEBI has also mandated nowadays, that each and every fund needs to declare their benchmark. So you can use those benchmarks to compare individual fund performances. But again, the challenge comes, okay, how will we know the overall portfolio? So your overall portfolio benchmark ideally is a combination of the asset allocation that you hold or the market cap allocation that you hold in your portfolio. So let's say, for an example, if we invest, there's an investment portfolio of 1 crore and 75 lakhs is into a flexi cap fund and 25 lakhs, let's say, is into a debt fund. So ideal combination of your benchmark would be Nifty 500 TRF 75% and CCL bond index, which is a debt, index, can be 25%. A combination of these two will show you the exact, benchmark for your portfolio, and then you can compare, okay, where does your portfolio stand? Is it beating the benchmark? Is it equal to the benchmark? Is it underperforming the benchmark? Right? So knowing the right benchmark becomes very crucial to calculate the exact kind of returns. Right? So I hope people have understood the benchmark and the differences. So please make sure that you are comparing your portfolio to the right benchmark, to the right, by knowing the right asset allocation, the right, your market cap allocation of your portfolio, and then only you can know and compare your portfolio in the right manner and know that, okay, are you able to beat the funds or not, or the, market or not. Okay. Now, what are the challenges? See, we have been talking about, okay, do this, do that, ऐसे ये benchmark भी मिल जाएगा, ये हो जाएगा. But the main challenge comes, first of all, it's very hard to calculate your own XR because there are too many transactions, especially people who've been investing for many years. People investing since even 2014, 15, 16, even somebody started investing in 19. If you have done too many transactions, then it becomes very difficult for you to calculate your XIRR. And maybe you will calculate it once, but how will you keep calculating it again? That is the major challenge that people face nowadays. That, okay, I did the whole exercise, I took the effort, I took all the trade books out, I took all the investments out, everything, I put it into one Excel, I did it. But what will happen after 1 year? I'll have so many transactions again. How will I update that? So that again becomes a challenge to calculate the XR returns. Even harder is to calculate the XR returns for the benchmark. So we just saw, the benchmark. Now, how to get the values of these benchmark? How to exactly compare the benchmark? Now, people just go and see कि Sensex का level इतना था आज से, 1 or 2 years back, Nifty was at 14,000 levels. Today it is at 25,000. Nifty ने दे दिया 60-70% return. Okay, what is my return? But this is not how you can calculate, because you have invested at different points of time. What we have seen in XIR is that it considers different points of times, different cash flows. So you want to calculate the exact XIR of the benchmark also, you'll have to put in a lot of effort on the exact dates which you invested the money in your portfolio. If you would have invested the same amount in the benchmark, then you will get the ideal benchmark returns for your portfolio, right? How to get the consolidated statements from you can get your consolidated statement. I think all of you must be receiving the cash on your email IDs. If you are doing demat accounts, you have mutual funds, you can also download your cams and cash from cams and k fintech. You can download the, we will also show you how to do it. But the challenge comes that these all these statements usually come in PDF form. Now, how to convert PDF into Excel? Will you type all the transactions? Will you go and, just keep, how long will it take? How will you convert PDF into Excel? Sometimes you will find an online tool, maybe you will convert, but it doesn't come in the right format. So how to do that? And again, to do this on a regular basis is again the biggest challenge, right?
So I think one very good thing, which is that if you are a mutual fund investor, every single transaction of yours the way you have invested from day one, you can get a complete statement where you will know which date you have invested, what amount, when you withdrawn. So there is a CAMS statement. So I guess Sagar will very quickly explain you how to get that data on your email. Once you have that data on your email, then it is easier for you to analyze. And as investors, it's good for you to know how to get all information about your mutual fund investment in one document. Okay, so Sagar, if we can quickly, I don't know, you've covered it,
Yes,
where
yes, yes,
how can
yes.
they generate that statement? If we can just take them through very quickly.
So what we'll do is, we'll just quickly look how you can generate a CAM statement or a consolidated account statements. So there, just a basic, there are two agencies which handle all the mutual fund transactions, CAMS and K Fintech. But the good thing is that they have now given a consolidated statement which you can download from either of their websites. So you can go to camsonline.com. So when you go to camsonline.com, you can go to MF Investors on the top. Here you will find MF Investors. Under MF Investors, in the statements, the first option, which is the cash, CAMS plus K Fintech, is what you need to download. So what you can do is click on that, go to get a detailed statements, including all the transactions which are there. You can select a specific period if you want to know from the start till that, since the time you have been investing, what has been your return. So you can just select the dates. Let's say somebody has been investing since long, and if you don't remember, since which day I started investing, just select it. Let's say 2020, 2001. If you know, yeah, usse pehle to I have not done any investment, just select any date. Let's say we select 1st Jan 2001 till today. You can get it with zero balance folios, without zero balance folios. With zero balance folios means if you would have, obviously, if you would have, you've been investing for so long, maybe you have withdrawn some amounts from some folios, which would now be zero value. So what would be the returns in those as well? You switch from one fund to another, you did multiple transactions. So we usually recommend that you go with zero balance folios. It will show you the true picture of your overall investment journey so far in the mutual funds. Just mention your email ID. So I'll just mention in dummy, let's say abc@gmail.com. You can mention a PAN, which is optional. If you want, you can mention. If you don't want, you can not. If you have single email ID linked to multiple PANs, it is better to mention the PAN so that you can get to know exactly on a particular PAN what is the amount of investments you have done. So you can do that, and then you just set a password. So I'll put, let's say, 12345 and submit. You do that within 10 to 15 minutes. You will receive this statement on your email ID, the registered email ID. If you don't receive the statement, you will receive an email that maybe there is no transaction, which will tell you that yes, maybe this is not the email ID linked to your investments. You can try any other email ID you would have. This exercise will help you to get all the transactions that you have done till date in mutual funds in one statement, and then you can do your analysis by getting the extra returns, by doing a proper benchmarking against the right benchmarks. I hope this was helpful for people to know how to get your CAM statement. Another important thing which the CAM statement will do, if you're not able to find maybe some folios, you'll get to know maybe some of your folios don't have the right details, so you can get those updated as well. So CAM statement carries a lot of other information also, which will be very useful for you.
Yeah, I think every single investor should do this for themselves, because when we generate CAM statements for our investors, and when we look at that statements, you won't believe There are so many investments which people would have done and forgotten, and KYCs are not updated, or things would have changed from the time they've done, and now they don't even know that those investments exist. So I think this will really help you, get a lot of past information at one place, and even do a little audit that is all correct KYC information updated, nominees are updated or not. This is a very good check for your mutual fund investments.
Yes. Similarly, you get a statement on a monthly or a quarterly basis from your NSDL or CDSL as well, which is called the cash again, which is usually received on your email ID. That contains all your investments in mutual funds, stocks, everything, and also your nominees, your account details, everything, which you can just have a look and get the full picture about your equity and debt investments, right? Now coming back, so we have talked about, okay, this is how you can calculate the returns. This is how you can do. Yes, there are some challenges also. Now, how do we overcome those challenges, right? So one way of doing that is what we have done is, we understand these challenges working with so many investors for so long. What we have done is we have come up with a very simple solution for you. So you can use our Finnovate's tracking platform, the mutual fund and your investments tracking platform, to calculate your XIRR returns just by doing 3 simple steps. The first step I've already shown you: download your CAM statement. Second is upload it on your Finnovate's, on our tracking platform, and voila, you will see your XIRR returns compared with the benchmark itself. So you go, you upload the statements, and you will see the returns.
Since the beginning you have been investing mutual funds, you will come to know everything. You have invested in large, mid, small. What is the benchmark of your portfolio since inception, and how is that performing versus the benchmark? So we had got multiple queries from investors that we don't have any tool to understand benchmark or understand our XIRR return. And at I'll show you today only. One investor forwarded me one statement which had like 25% XIRR return. So he was very happy that his portfolio is getting 25% return. But when we upload it in our software, we saw that 25% versus the benchmark return of 35%. Like right now, 1 year, 2 year, the market has been very high, particularly mid and small cap have given very good return. So the person was happy with a good XIRR. I'll say 25% XIRR is very good. But what is it versus the benchmark? If the benchmark has given more and he's getting 25, if the benchmark has given 35, then that is not a right. Your portfolio, after all charges, all cost, everything, should beat the benchmark by at least 2-3%. It should generate, I will say, forget 2-3, even 1-2% post cost more than the benchmark. Then you can say okay, you're doing better than the benchmark over a long period of time. So all over to you, Sagar, again.
So what I'll do is I'll just show you a glimpse of a platform. We have a demo account which we are using so that you can get to know exactly how you can, what all things you can look at our platform. So let's say you upload the, your statements. You will see this kind of a dashboard where you will be able to see, okay, what all, investments are there. What is the current value? What you would have invested? What is the even family member level wise also we have given, husband, wife, parents, anything you can upload all the things at one place. You go to the portfolio and you will see the amount invested, the portfolio value, the current value, the XIRR, and the most important benchmark XIRR. So it automatically calculates the benchmark XIRR considering each and every transaction that you did on the day that you did. If you would have done in the same, your ideal benchmark, what would be the returns? So if you see in this case, the portfolio is beating the benchmark.
Can we click the mutual funds? Can we click on mutual funds? And if you can see, we have how many transactions? Can you just go to the transactions tab? So if you can see 522 transactions this mutual fund investor has done. And if you scroll down, this person has been investing since which year? We will just show you, okay, this CAM statement is so magical that we uploaded it on our platform. And if you can see, this investor is investing since 2008. Okay, sometimes 1,000 rupees, 2,000 rupees, very basic small amounts in SIP. From 2008, to 2024, if the same investor would have invested money in the benchmark, then what would have been benchmark return, and versus in the portfolio which they have invested, what is a return? What you can see on the screen, 19.42. This 19.42 is after the expenses which the investor has paid to the fund management, to the asset management company. So there will be 1 or 2% fund management fee. So after paying fund management fee, net of all cost, the return this investor has got is 19.42. And if this investor would have invested in ETF or a index fund, okay, or in the benchmark, then the benchmark return is 15. If the same amount, 1,000, 2,000, 2,000, from 2008 to 2024, if this investor would have invested in benchmark, then they would have earned 15.35. But they have invested in a kind of a nice MF portfolio. So after cost, also they are generating a XIRR of 19.42. So this investor from 2008 to 2024 is generating an alpha. Okay, what do you mean by? So it's a new term. It's the alpha. 15 is the return and 19 is the XIRR. So on benchmark, there is an alpha of 4% and 4% compounding every year, like annualized every year for over a period of time. So this is what we have done for benefit of all investors. There is no charges. You don't need to be a client or anything. You can just use the Finnovate's tracking platform to generate your CAMs. Go upload your CAM statement and see, select the right benchmark. And if you can see, some people have conservative portfolio, some have aggressive. So if you can click the benchmark XIRR and show the people the different benchmarks. So we have Nifty 50, Nifty 500 total return index. We have a combination of mid, small, bonds, everything. So every kind of benchmark which you can think of, that benchmark we have built, and we are showing you how your portfolio is performing versus the benchmark. And this is absolutely free for all.
Yes, so we have been receiving a lot of requests that people, it's getting very difficult for them to calculate their actual returns, know the actual performance of your portfolio. So this is a very easy and, time-saving tool for you, which is obviously, as mentioned, free of cost. You can just go get your CAM statement, upload it, register on the platform. And yes, you can easily see the returns that are there in your portfolio. So many, thousands of transactions, hundreds of transactions, thousands, doesn't matter. All the transactions, just in a short period of time, you'll be able to see all the exact XR return of your portfolio in front of you. There are so many other statements also. You can look at them, analyze your portfolio, do a detailed analysis of your portfolio, know exactly where your portfolio is not doing well, how it is doing. You want to know your taxation. Everything is available on the platform itself. So yes, this platform is available for you. Go check it out. Check your XR returns. If you need any help, our team is there to help you and support you. Okay.
So if you can see in this example, this investor, like it's a very retail investor, 1,000, 1,000, 2,000, chote amounts. From 2008 to now, this investor from her pocket has invested 11,87,000, not even 12 lakh rupees. But if you see the portfolio value today, the portfolio value today is 50 lakh 44,000. 11 is 50 lakh. So the portfolio is close to 4.5, 5 times. Okay, and it's been built over a period of so many years, and the benchmark return versus the portfolio's XIRR. So this is the right way for anybody to judge how the portfolio is.
Yes. Great.
And what we'll do is that someone was asking me, can we see the XIRR return of a stock portfolio, and can we see stock-wise XIRR? So we'll just show you. We've tried to build something like this because every single broker's back office we saw was giving only absolute return. कि मैंने share में ये पैसे डाले, अभी इसकी ये value है. So if you can see for this investor only, if I just open the stock and ETF portfolio, I go to the portfolio. So if you can see the return, XIRR return at the portfolio level, no, you have gone to the transactions. If you can just go to the portfolio X-ray. Okay. If you go to the portfolio X-ray, you can see that Ashok Leyland, they got an XIRR of 18%. In one FinnFit or something, they've lost 48%. In GTL, they're gaining. So stock-wise, where they are gaining good amounts in terms of not absolute return. Absolute is shown, but also XIRR is shown. And at portfolio level, what is the XIRR return? If you can just scroll up, if you can see at portfolio level also, it is a 16% XIRR. And we have to now select the right benchmark. So this benchmark has automatically been put. So if I go to the portfolio summary, can we just go to the summary? Yeah, can we just go to the summary? Okay, if I go to the summary, if you can see large cap, mid cap, small cap, this portfolio is small cap heavy. So the right benchmark, we will have to go and change the benchmark XIRR and select the right benchmark. Okay. So now this investor thought that she is doing very good in her stock portfolio. She invested 649, it is 8. तो दिख रहा है कि 1.5 लाख बड़ा है, दिख रहा है कि 16% XIRR है, but what is it against benchmark? Her direct equity portfolio is underperforming the benchmark. Can you go and change the benchmark? Because this portfolio is heavy in small caps. If we can just make it Nifty 500 TRI, or we can make a mid and small cap as a benchmark. If you can do this Nifty mid and small 400. See, I went and changed the benchmark. If this same investor instead of investing in direct equity, okay, if she feels कि मेरे को 1.5 लाख प्रॉफिट हो गया है, I got a 16% XIRR. But the benchmark, if she would have invested this money, it would have been 31 point something. So she believes she's made 1.5 lakh rupees profit in her direct equity portfolio. Absolute return looks very good. XIRR also looks very good. But when I compare XIRR to benchmark, my advice to this investor is don't manage your direct equity portfolio on your own, or you exit your direct equity portfolio and move to mutual funds, because your mutual fund portfolio is beating benchmark by 4-5 percentage point, but your direct equity portfolio is underperforming the benchmark. Okay, so absolute return and standalone return, okay, doesn't mean what is it against benchmark, and the right benchmark is extremely important if you are an investor. Yeah. Can we just, yeah, now I guess we've demonstrated how you can track versus the benchmark.
So yes, I think we started with the understanding of returns, challenges with the returns, what are the differences, and now how to calculate returns, and how to compare your portfolio and understand the portfolio performance as well. So just to summarize, key takeaways, we will say that CAGR returns are usually good for one-time investments like your real estate investments. Yes, in real estate, it would be good that you can use your CAGR returns. But again, if you have rental income, then anything XIR would be a better option. XIR should be used for periodic or irregular cash flows like mutual funds or stocks, as we have discussed. Majority of DMATs accounts show absolute returns in your portfolio performance, due to which a lot of people are being misled that, okay, their portfolios are doing good, when actually their portfolios would not be even, beating the benchmark, or are at a very, suboptimal performance of maybe a single digit as well. And all mutual fund fact sheets and websites show CAGR returns over different time periods. The returns that you see over 3-year, 5-year, 10-year, or all past performances, they are all CAGR returns. They doesn't match. They usually don't match with the investor portfolio returns, because at the end, you have invested over a period of time. Your XIR returns are different. Do the XIR calculation. It will show you the correct picture, and then you can take the corrective actions. So any questions from anybody?
Yeah, there are many questions. So what I will do is that I'll quickly take questions. Someone, Pallavi, is asking that please clarify again when to use absolute, when to use CAGR, and when to use XIRR.
So Pallavi, absolute you have to use only in case of investments less than 1 year and one-time investments. Otherwise, absolute doesn't make much sense in comparing your mutual fund performances or any other product for that matter. CAGR, as we mentioned, can be used for one-time investments. You did a lump sum investment like in a real estate or in gold. You just did one time, and you want to know from one point to another. Okay, what has been my return on an year-on-year basis? Like FDs give you 7% return. So if you want to know, okay, every year what returns have I earned, you use the CAGR. But if you have multiple cash flows, panning over different time horizons, different amount of cash flows, money inflowing inflows and outflows, the best way to calculate is XIRR returns.
There is, I guess, one more question which we've answered, that can we calculate XIRR return for the entire direct equity portfolio and also for individual companies. So we said the formula is the same. You should know the dates on which you invested in the shares, and you should know the amount invested and what is the current portfolio value. So you can calculate XIRR for the portfolio and individual stocks too. Someone was also asking about, just one second, some questions on, can this XIRR or CAGR formula be applied on inflation? And can we calculate the targeted corpus? So I guess whoever has asked this question is brilliant, because he has got the formula, like he's got the understanding very right. Yes, you can compound your expenses, keeping in mind the rate of inflation. So like investments compound, your expenses also compound with the factor of inflation. So keeping that in mind also, you can actually calculate your targeted corpus. Okay, maybe in the
So,
next session, we'll do some thumb rules on how to calculate the corpus requirement with inflation and all that.
so someone is asking, is XIR data for AMCs available with MFI? No, XIR data is not available because XIR data is very individual to every individual investor. So you have to do your own analysis. For mutual funds, they cannot show you the exact XIR because it depends on your investment time horizon and when you have invested. Every investor is investing different amounts on different dates. So XIR is very particular to you. The whole purpose of telling you the difference between XIR and CAGR is that don't just compare your performance by looking at the CAGR of the mutual funds.
So I hope this was a fairly educative session. We have some very exciting sessions coming up in the coming Wednesdays, and your friends, colleagues, and all who really genuinely want unbiased financial education. Okay, here the objective is not to be biased about anything. We will present the facts the way it is. So you can just forward our links to people. They can join our sessions every Wednesday. We have one topic on finance, and we come up with a very unbiased and a neutral kind of our view, or maybe education on that particular topic. So you all are free to forward our links. Please answer the above questions. Okay, if I've missed any questions, if there is a repeat of the
So
questions,
how do we
Mr.
troubleshoot when
Harish.
we get stuck applying when what we have learned today? So the way would be you can also get in touch with our team. We can help you in getting your returns calculated. Just upload it on the system and it will be very easy for you. Uh, we have made a chat group, WhatsApp group as well. You can join there if you get stuck. People will be there to answer your queries on the group as well. So you can join that. You will keep getting updates about our future webinars, future this thing as well. So people are
Okay.
asking how I am on laptop. How do I join on WhatsApp?
Yeah. So I guess if you have left your email ID and mobile number, we'll try and send you a link on your WhatsApp also for you to join. And I guess someone has asked that please answer the above questions. Can I get that question again? Because so many questions have come. Mr. Harish, I'm trying to track your question. If
Yeah,
someone
he
from
has
the
only
team
asked
can
the
help.
if he gets stuck. So I think I've answered that.
Okay, okay, fine.
Yes, it's answered.
Yeah,
I hope.
I think before also he's asked, yeah, okay, what is Ventura portfolios? I think he asked that question. So, one of the investors' broker is Ventura Securities. So he asked that in the Ventura ka statement which he gets in the stocks. So does he see absolute return, or does he see XIRR, and does he see return net of cost? So I was just clarifying that he sees absolute returns, and the
Yes.
returns are net of brokerage cost, everything, because the buy price of that share has got adjusted for everything, and now he's seeing the current portfolio value, so that is net what he's seeing. So this is just to clarify on question someone asked that question.
Yes, and majority of the as we mentioned, stockbrokers are only showing absolute returns, not XIR. So XIR you will have to calculate on your own. Even some platforms which show XIR are not very accurate. We would really recommend that do a your own analysis, especially for the stocks as well, because then only you will get the right picture about how your portfolios are performing.
We'll just do a short poll and it will be helpful if you all, just like respond to that poll. You can please in the chat also or write to us also or on the WhatsApp group also, you all can tell us what topics as investors are pain points for you all. And you want us to come up with more educative sessions on that. We'll definitely come up with more sessions like this, which will help you understand different aspects of personal finance, taxation, and very different topics, which will simplify things for you. Yes, definitely, we'll register you for the coming sessions. The next 7, 8 sessions, like next week, we are doing a session on how to basically build a mutual fund portfolio. How do you screen mutual funds? How do you build portfolio? So it's going to be very interesting session if you want to learn how to build a mutual fund portfolio, so you can register for it. After that, we have sessions on different sectors which are looking promising for investments. We also have how do you build a equity portfolio, what is technical analysis, what is fundamental analysis. So very crisp sessions where the whole objective is only genuinely educating with a very neutral or an unbiased kind of a view. So you all can keep registering for our Wednesday sessions. In fact, in one of the Sundays, we are doing a very elaborate 2-hour webinar on bonds. So people only know investing in fixed deposits, but there are a lot of disadvantages of investing in fixed deposits. So we will do a session that if you want to earn a fixed return, you don't want to take a risk on your money, then what is better than fixed deposits? So we are going to do a very detailed and educative webinar on bonds. How do you evaluate bonds? How do you build a bond portfolio? How is it better over fixed deposits? So you all can even register for the Sunday session. We will announce it very soon, which is going to be on debt markets, bonds, beyond FDs. And I can promise you that it's going to be extremely educative and something very new, which you will learn about the Indian debt and bond markets. Thank you so much for everyone who participated in the poll. And, it's encouraging for us to keep doing these sessions. I would like to thank the Finnovate team, particularly Sagar, because till date, whenever I talk to investors, they just get so confused. What is XIRR? What is CAGR? What is absolute? And wo samajh mein nahi aata, simple calculation. So the way Sagar is simplified a topic which investors feel very complex, I'd really want to thank you, Sagar. It was very nicely done. And again, I would like to thank Vandana, who was behind putting this PPT. We are just the face and we are doing the talking, but the brain behind this is Vandana. She's also a certified financial planner from our team, and Sakshi, Pranav, and a lot of other team members who are attending, who have talked to investors and come back to us with different topics and the pain points of the investors. So once again, thanks to everyone. And stay tuned for the coming sessions.
Thanks everyone for joining. Thanks a lot.